please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
18, I'm Ekta Batra and with me is Prashant Nair. Well, it's turning out to be a day of definite profit booking for us. So the Nifty is currently at around 10,020. We have recovered from the day's low of around 10,011 for the Nifty, but nonetheless still weak, still a lot to go in terms of maybe the sentiment probably needing to be pulled up. The 20 DMA stands at 9995. So let's see whether we do slip below 10,000 and let's see whether we test that level or not. But it is a combination of global cues as well as a weaker rupee, which seems to be weighing in terms of sentiment on our markets. And you can see what's happening in terms of stocks predominantly. So it is a lot of the Bank Nifty constituents which are really weighing. So the Bank Nifty is down around 1.3%. Yes Bank down 3.5%. India Bulls Housing Finance too showing profit booking down around 2.2%. But a lot of stocks from the broader market stand out as well. Hindalco rather also seeing profit booking in line with the entire metal space. Reliance Home Finance, new listing, that one is up around 5% odd. So maybe we're going to go home with some red and all due to what's happening maybe in terms of global cues as well.
Take your pick, Ekta. There is a lot to blame.
Yeah.
But I think, you know, beyond any of it, be it North Korea, be it, you know, whether fiscal deficit will be higher in FY18, and any other argument that you might come up with, I think it's been clear for some time that maybe the market overstretched a little bit on one side and underlying fundamentals were not keeping pace. So there was that pullback, you know, it was supposed to happen, expected at some point. It's now maybe starting to happen. That's what we are seeing. So, you know, and again, we are down 100 points, but just in a short time frame, if you just go back and see what happened this week, we're down 60. So, you know, week to day, we're basically down 60 points on the Nifty. I mean, if you look at the month, we are still up about 1% odd. You look at the quarter, we're up about 5%. You look at the year, we're up about 22, 23% odd or so. I mean, all these numbers are essentially Nifty numbers. So, I mean, for the year, you're still up 22% odd, which is not bad at all. Of course, corrections will happen. They're part of any uptrend as well. And you need some triggers, and they've kind of lined up at this point. I just want to quickly put up the rupee as well. The rupee sort of blew out 50 odd paisa yesterday. And there was a fair bit of chatter yesterday itself during the day that there might be some expansion of fiscal deficit, etc. So today again we are down about 1/4% or so. So about 64.9650 on the rupee. So I think, I mean, in terms of reasons, what the government will do to stimulate the economy. And by the way, I mean, there are different kinds of opinion whether we actually need stimulus. But I think more and more people are veering on the side of, well, we needing some stimulus, but what kind will it take? Will it affect inflation? I think those are things which are top of mind for a lot of people. We will continue to discuss this important aspect and what might come of it, but let's begin the show with our first technical guest. Sandeep Wagle of PowerMyWealth.com is now with us here. Sandeep, good morning. Good to have you here. Thanks very much. What would you make of this 100-point fall, and would you reckon we are going down more?
Good morning, Prashant. Very clearly, we have broken down on the hourly charts. In the intraday sense or talk of the next day or two, I see some more downside. Now, it doesn't mean that we may not move up, but 20-30 point bounce back is the ideal level to sell. 10,060, 70 in the Nifty, very, very comfortable selling. I don't see the Nifty break 10,120 on the upside. And on the downside, I would talk of a level of 9,900, 9880, somewhere around that. So at least 100, 120 points downside from the current levels is on the cards.
Okay, well, and that's quite dreaded in terms of the statement coming in from the NSE. No, NSE MD in fact saying no decision yet. The key operative word being yet in terms of extension of trading hours. We're hoping that that doesn't happen. I mean, a lot of people are hoping for that, but nonetheless, the NSE IPO timing hinges on co-location case resolution. So more statements, but I think that would be one of the key ones which people will watch out for.
The IPO timing, Ekta, I think that is always kind of, it's been clear for a while that the final verdict has to come out in the co-location case, and then only the IPO will be rolled out. The other condition was the exchange getting a CEO. That is already in place. Now the resolution, and the resolution is going to come from the market regulator. I mean, they'll have to come out with their findings and their final report. But I think in the immediate sense, the more sort of pressing thing is going to be this entire trading hours extension thing, and there
no decision yet. But okay, Sandeep, let's get talking about your stocks then. What would you be strategizing in terms of stock specific calls?
I would go with the sell in a DLF, stop loss of 182, target of 171, and a buy in Cipla, which can move against the market. The pharma space is also looking good. Stop loss of 587, target of 612.
Okay, all right, Sandeep, let's get in some Twitter queries for you to solve this Friday. Well, the first one is, the first question is from Sanjeev Vasudev. He has 300 shares of Piramal Enterprises at 2995 and for 2 years. He wants to know if it is a good option to stay or exit.
I would recommend a hold, and probably he can add on at lower levels in case he gets it, which is currently it is lower. I would add on, and my stop loss would be 2500, and my target would be around 3500 given a time horizon of 12 to 15 months.
Okay. The next question is from Raja Gopalan. He has shares of Crisil, which is bought at 1900, and shares of Syngene at 1400. Wants to know if he should hold or sell.
I would again recommend a hold. Stop loss of 1700, target of 2500 given a time horizon of 12 to 15 months.
Sandeep, thanks very much. We speak with you soon again. Appreciate your time here this morning. We'll get some F&O strategies now. Krish Subramaniam is joining us on the show. Krish, good morning. Good to have you here. What would you be recommending in terms of trades?
Morning, Prashant. Nifty per se, we are seeing some sort of breakdown. I think this is more of a long unwinding. I mean, news flow is not very encouraging. So obviously, the traders would be reluctant to carry forward the trades for the next week. So I think one could possibly do a bear spread, buy a 10,000 strike put and sell a 9,900 strike put. So the net cost comes to about 23, keeping a target of 60 and maybe a stop loss of 10. And stock specific, a couple of oil and gas stocks which are normally more vulnerable in such geopolitical tension times. So bear spread in HPCL, which has in fact the oil PSUs are seeing some sort of weakness going to expiry. So I think as bear spread in HPCL would be in order. One could possibly buy a 440 strike put and sell a 420 strike put. So net cost comes to approximately 6 rupees, keeping a target of 12 and maybe stop loss of 3. The last one is a bull spread in GAIL. Now GAIL has been one of those relative outperformers in this settlement so far. So if things improve, odds are high that probably this will be the one which will sort of outperform again. So one could possibly buy a 400 strike call and sell a 420 strike call. The net cost comes to about 4, keeping a target of 10 and maybe one could keep a stop loss of 2.
Okay, all right, Krish, we're going to leave it on that note. Thanks very much for joining in and taking us through that. Well, we need to take a break, but before that, just wanted to point out what's happening with matrimony.com. That new listing from yesterday is seeing another 6% decline in today's trading session as well. Remember, it ended the day yesterday with around a 5% decline, so that's continuing into today's trading session. So no sort of respite coming into the new listing. Matrimony.com at around 844 rupees is the one that I'm talking about, should come up for you. But need to take a break, but as we do that, let's leave you with some market opinion coming in from Louis Ogans, the Global Head Emerging Markets Research at JP Morgan. They have recently downgraded India.
India started to deviate from the EM narrative. One is that we had some disappointment with growth, and we were ourselves forced to downgrade the full-year growth forecast. So while we are upgrading many other countries, we downgraded India. Granted, at 6.8%, which is the latest projection for this year, it's still the fastest growing economy in the planet. So, so much for, getting too upset with that number. But I think that I think what we're seeing in general, the interpretation that we have for this deceleration and this negative surprise is that we're seeing the short-term cost of the government deciding to take important structural reforms that will take time. I mean, we think that the benefit will be seen eventually in the medium term.
Welcome back. Well, the market is definitely not looking good in today's trading session. In fact, it's now at the low point of the day for the Nifty 10,011. We had already retraced or we had tested those levels earlier in the morning, and now it's a fresh intraday low that we're seeing for our market. So 10,010 is currently where we're at. Remember that just to reiterate, the 20-day moving average stands at around 995 for the Nifty. So that would be something I think the market would be watching out for closely. Let's see whether we manage to just about sustain this intraday low that we've hit twice already in today's trading session. But one space which seems to be outperforming this entire week is the pharmaceutical space. If you look at the Nifty Pharma as compared to the markets, then there's definitely some amount of resilience. To talk more about that, we have Deepak Malik of Edelweiss Securities joining in to discuss that. Deepak, hi, thank you very much for taking the time out. First, wanted to actually start by talking about yesterday's top gain on the Nifty, Dr. Reddy's. There have been 3 positive brokerage reports which have come out just in this week, including yours, which has been an upgrade. What is making you so optimistic on Dr. Reddy's, and what's your revised target price?
Yeah, hi Ekta, thanks for having me on the studio. So Dr. Reddy, basically why we have upgraded the stock, there were few issues over the last 2 years when we downgraded the stock. So there was regulatory issues, they got the warning letter on 3 of the plants. Second, they were having currency issues in Venezuela. Third, they were having the concentration of revenue in few of the products like Vidaza, Decogen and Wellside. So all these concerns have now faded, and in fact last quarter was the worst quarter for the company, where we have seen the margins going to 9%. But from here onwards things will start improving. Like in case of regulatory issues, they have already got the positive response from US FDA on 2 out of 3 plants. In the Voda, the regulatory issues still persist, but I think there also things will not get worsened from here. Second, their complex pipeline has now ripened enough. There are few very good products in the pipeline like Copexone 20 mg and 40 mg, Suboxone, NuvaRing, and plus their biosimilar pipeline, which is not appreciated by the street as of now. So all these things augur well for the company over the next 2 to 3 years. And Dr. Reddy has one of the very good R&D pipeline, and we believe their earnings should grow by 50% CAGR over FY 18 to 20, after having 40% decline in FY 17 and constant earnings in FY 18. So I think in the next 2-3 years things are lined up very beautifully for Dr. Reddy. So we will keep hearing good news about Dr. Reddy. They have tagged in Copexone for end of this year, okay, for NuvaRing for quarter 4, and for Suboxone also in quarter 4. So all these things we'll get to know, and we are positive on this name.
Okay. Deepak, just before that, testing 10,000, Prashant, we're going down to levels of around 10,005, 10,006. So let's see, it seems as though 10,000 is probably going to be broken in today's trading session. Mid-cap index down around 1.5% as well. Deepak, just coming back to Dr. Reddy's, you don't think the regulatory overhang is probably going to weigh eventually on the company?
So it will take time, it will not happen very soon, but the Yes, the regulatory issues will definitely go down from here, because already 2 out of 3 plants US FDA has visited, and in one of the plant, Mirialgoda, they have given EIR. Second, in Shikakulam API, they have 2 observations which are not very serious in nature, which are very minor. And in third, Davuda, there are observations which are a little serious in nature, and I think there will be re-inspection happening in that plant. But most of the pipeline which is going to come in the next 2 to 3 years is not dependent on the regulatory outcome in these plants. So I think the earnings growth is not dependent on how things will happen in the regulatory front on these plants. So I think yes, it is very important for them to improve their regulatory standard and get the EIR on these plants, but at the same time, earning is not dependent on that.
Okay, I just want to talk about Divi's for a quick bit and what your view there is. It's seen a fair bit of recovery, but is it now a kind of fairly pricing in the prospects, which you can make out for the next 1 year?
Yeah, Divi's I think was a remarkable, in a remarkable way they got that US FDA visit successfully done, and I think they are on the way to resolve those import alert which they got just 7 months back. We have not seen this way happening to any other company ex-US, so we tracked this space, and we have seen that almost 65 warning letter has been issued over the last 4 to 5 years, and only 2 has been resolved. And no import alert has been resolved after post-GDUFA period. So if you see in India, Wokhard has got the import alert, then Ranbaxy got the import alert, and then IPCA got the import alert, and now this Divi's got the import alert. But then Divi's, the way they have done it, I think it's phenomenal. And that shows the strength of the customers, the MNC customers which they have. And yes, the stock has run up, but then and it's discounting a lot of good news which is there. So now the earnings have to come. I think earnings will start coming in from FY19. FY18 will remain a weak year for them because half year has already been passed. So it'll take time for them to recover the earnings.
Okay, that point is taken, Deepak. Quick last question then. IPCA Labs, that one has seen some real interest in the past week or 2 weeks, and that too sporadically, these double-digit gains that we saw yesterday and even last week. What's happening in that stock, and do you know about any maybe expected news that we could work with on that one?
Yeah, so post the Divi's news, the IPCA also has import alert on 3 of...
Okay, I think we've lost that particular link with Deepak of Edelweiss, but nonetheless, talking about IPCA Labs, that maybe that interest post Divi's is probably rubbing off a little bit on IPCA. Remember, 3 plants are under import alert there as well. But Deepak, you're back with us, so just quickly, if you could just finish that answer.
Yeah, so yeah, so IPCA also has 3 plants under the import alert, and most of the work which was supposed to be done, they have already finished off that. So they are expecting that all the work will be finished off by end of this year, that is in December 2017, and they'll invite US FDA for re-inspection. So post the Divi's news and the likely resolution of import alert, people are getting warm up to the fact that they'll be able to, IPCA also will be able to resolve those issues. That is number 1. And number 2, they have also participated in the institutional malaria order in the African market, so for which the outcome will come in the next 1 month. So that is also the positive news. So looks like the worst is over for the company, and from here onwards things will improve. So valuations was dirt cheap for the company like IPCA. So I think now people are doing bottom fishing, and in that I think people have bought IPCA.
Deepak, thanks very much. Good speaking with you, and we'll continue to invite you back on the show to track the progress in the pharmaceutical space. The market is looking weakish. It's been threatening to break that 10,000 mark. I mean, actually, let me just quickly look at what the low today is. The low today is 10,005. So we're about, what, 4 points off the day's low. And remember, I mean, the all-time high is about 10,178. So you're basically about 180 points off. I mean, this correction now is about 180 odd points, which is what? Which is about under 2%, about 1.7% or so. That basically is the fall that we've seen from the top. Lots of losers, as always. I mean, actually, why don't I quickly tell you, especially in the futures and options space, where the pain is in terms of the losses. So let's actually put some of these names up. We can have Jindal Steel and Power coming up on your screen, 144.75 JSPL. Look at something like Reliance Capital, which is down about 4.6%. These are the biggest losers in the F&O space. DLF is back under 180 with about a 4.5% cut. That is DLF. And then you go on to Steel Authority of India, which is down 3%. Look at something like a Yes Bank, which is down about 3.5%. Hindalco, which is down 3.33%. Dewan Housing. I mean, Dewan Housing for the last 2 days, look at the intraday charts. It fell between 20 and 30 rupees and recovered, almost all of the losses. At least that's what happened over the last 2 days. That is DHFL. And then you look at Jet Airways, Bajaj Finance, IOC, Ujjivan, Wockhardt Pharma. I mean, all in the range of about 2-3 odd % or so in terms of losses. So that's where we are at as far as the market goes. We'll take a very quick break here. We will come back with what's happening in the commodities space. Manisha Gupta is going to be here. Pratmesh Malia of Angel Broking joins in as well.
And when we come back, Market Technicals, Ashwini Gujral will be with us. Welcome back. Well, just 3 points away from breaking 10,000 now. We have Ashwini Gujral with us to talk about that. Ashwini, over to you then. Seems as though 10,000 is going to be broken in just the next couple of minutes. What are you telling your clients? What's your strategy from here on?
Well, at some point we were worried about 10,000 being broken on the upside, now on the downside. See, corrections are part of life, and just intraday, I think we are in a pretty washed out situation. So the idea intraday should be to cover your shorts and maybe to some extent even take long positions, because this kind of a decline often cannot continue in a one-sided manner. We've been falling since yesterday on Bank Nifty. So chances are fairly bright that at some point, you see some buying coming back, because obviously there are value hunters, etc., who tend to take advantage of this. But overall, I think the bull market is now on a hold, and we will remain in this 9,700, 10,200 type of zone till we are able to figure out how to fix the economy, etc. So that way, I think 10,200 will be some sort of a top for a while. Now, since I believe that from here, possibly, plus minus 20 points, you'll get some amount of recovery. Individual stocks, if you want to buy, UCO Bank is a buy with a stop of 30, target of 36. Dena Bank is a buy with a stop of 32, target of 37. And DLF is a sell with a stop of 181, target of 168.
Okay, I think we are at the 10,000 mark, basically. Just about, I think the low has been made at about 10,000 or so, round about there. Today's low, that is. But yeah, I'll tell you what the low is. Low is 10,000.25. That's the exact low, and we're just floating around that level. 120 odd points lower. I mean, we only went about 200 points, roughly 200 points over 10,000, and we've retraced 200 points. I mean, so you have to keep that in context. And it is an important psychological level. I mean, all these round numbers, I mean, 8,000 was important, 9,000 was important, 10,000, of course, was very important as well. So it's got that importance, that significance as well. But we basically went about 200 points beyond 10,000, and you basically back at that point. So, the other thing to remember is you're down 2% basically. So, but I guess the more important thing, as Ashwini pointed out, is the loss of momentum, which is kind of clear now. It has been clear now for the last couple of days. The market was finding it very difficult to move past the earlier highs, etc., which was about 10,178. Roughly around 10,150, the market was finding it very difficult to take out effectively, and now it's gone in the path of least resistance, as they say in financial markets. Ashwini, I heard you say the bull market is on hold. Hold for now, or the hold button will be pressed for long?
Well, it is on hold till we figure out what we are going to do about the apparent slowdown, and what kind of stimulus comes in, if banks are going to get refinancing, etc. Till that happens, because suddenly everybody has realized that we are in the midst of a slowdown, and maybe in a slow economy, earnings also will not come, and possibly all this consumer, etc. See, everything that was positive can suddenly be turned on its head. Basically, at 10,200, the market was overbought. Everybody who wanted to buy had bought. So now we are looking for reasons to, move back and probably get the market in a situation where again people want to buy it. And meanwhile, these problems have come in and they have created that correction where buyers have taken the foot off the pedal, and the markets are going through some genuine correction.
Quick word on the bank Nifty before we let you go, Ashwini.
So on the bank Nifty, we've fallen from yesterday 25,050 to about 24,500. I think that is where things are looking a little overdone, maybe in the short term, and you could have a 150 point type of rally in case the rupee recovers a bit, and if the European response to North Korea isn't as bad as people expect. So somewhere, out there, I expect some amount of intraday rally before fresh selling comes in.
Okay, fair enough, Ashwini. We're going to come back to you in just a bit. But as of now, the market is retraced back from that 10,000 mark. So let's get in some heavyweight opinion. JP Morgan India Investor Summit 2017 is underway in New Delhi, and CNBC-TV18 gets you the biggest and the best of the JP Morgan experts. In an exclusive conversation with Jamie Dimon, Lata Venkatesh began by asking him about the big headline, the North Korea nuclear threat and its implications on the globe. Take a look.